McGuire, Chief Market Strategist and Economist at MXT Global, with me in studio. Pete, welcome. Let's kick off with bullion because it's been gyrating, but in the wrong direction if you'd held a warrant on it, believing it was going to appreciate more towards the 1350 level. Why has it failed to fire?
Well, good morning, Carson. You know, when you think about it, in the last 2.5 to 3 weeks, it's down $105. If you were looking at, any form of structured product or option, and if you were to the long side, you'd be smashed to pieces. Though many traders have, it's been a wonderful trade to the downside. And any market that moves that quickly, the smart money's taken out, or they've shorted gold, they've shorted precious metals, moved into the equity markets, and I think it's just been a glory trade all the way through, really, in the last best part of 6 to 8 trading sessions.
We just had Chris Weston on. He was in China saying their view, though, is that the market for them is rigged, i.e. equities. And to that extent, much more of an appetite, perversely, for commodity trading, where might not be rigged, but it's risk times 10. Yeah,
it certainly is. But then you think about what happened to the copper market, and that's been the wonderful barometer that we all look at globally, and it's down 11% for the year, for the first 3 months. So the quarter, that's a very, very heavy fall. Sure, we've had Lunar New Year. Certainly you have a slower demand picture, considering that colder weather conditions, and of course traditionally over that January, February Chinese sort of time frame.
It's interesting you talk about China. Are you surprised it got such a muted gain on the LME, given the kind of bad news is good news story for China, i.e. they'll stimulate, therefore we'll use more copper, but it only ticked up about 0.2%?
Yeah, look, I think the market, the whole commodity complex has certainly been very much weaker and more bearish. The only green lights out there really are across the agricultural sector. I think where you'll see, probably you may see a little bit more movement upside, possibly later April, early into May. I wouldn't be surprised to see, maybe a 3 to 5% jump or bounce from these levels. But it all depends also on where the US dollar goes, what happens as far as, growth trajectory. This picture certainly with China, but what's also happening in Europe. So maybe these are new levels that we're just going to see a little bit of range-bound trade.
Talk to me about how you can have a stockpile picture, though, on copper now sitting at in a very weak position. You've seen a 28% slump in stockpiles.
Sure.
Why does that not inject fresh interest in the price?
Yeah, as you sell it down, the time to buy is when you got cheaper, and that may be the point that you'll see a further weakening, possibly down another couple of percent, which in turn, if you're going to buy this damn thing, it's far better to buy cheaper than more expensive, and that could be the play that everyone's just waiting on. So if buyers aren't out there and they're not actively pursuing the market, then normally price discovery is you see a little bit of a weakening, and that may be playing well into the hands of the warehouses and so on.
Let's talk equities.
Yep.
In the United States. It seems everyone's in on this trade, which was almost should be a flashing warning signal, should it not?
Yeah, I mean, who would have imagined at Christmas time that you'd be up at these sort of levels? We had a huge year last year, up the best, 20+%, best year in, decade and a half. The way it's moving, I mean, there's no chance. I think you're going to see 1900, that magical number prior to Easter, if not sooner. The overall picture over there just seems to be very, very, very strong. And I just don't see it weakening off. You may see a bit of a tail off or a sell-off post-Easter, which isn't unusual in that holiday season. But we've just had a very, very sharp that weather condition in the northern hemisphere has been brutal over the last few months, and now if you get a good sunny picture as far as weather over the the autumn, the spring and the summer in the northern hemisphere, this could really pick the market up, and I wouldn't be surprised to see some point 2000. And now that was what we were calling this time last year. We'll see that in 14, but it's very achievable now.
You're not calling a tech wreck?
I think the overall demand is strong. I think earnings are fairly strong, and the unemployment numbers seem to be moving in the right direction. Though I can't see a rise in rates anytime soon, and I think the stimulus is re-engaging. And
it's interesting you say earnings are fairly strong. Some are saying they're anemic. If you strip out, if you look at the forecasts and the games they play, the things they take off balance sheet.
Of course, and the accounting, of course.
Totally.
But you strip that out. But that's Also, you're looking at the demand picture. You're seeing, as far as the automobile sector, you're seeing exports, so healthcare. Certainly the economy is a lot stronger than what it was a couple of years back. So that's always underpins company performance. And I think
you would hope it would be with the trillions they've thrown at it, that it would be a little bit stronger.
Well, absolutely. And it did do the job at reinflated asset prices. The only thing you're going to see, if you see a weakening in the housing sector, that could cause some a little bit of a negative feed. But if energy prices stay at these levels, I think overall it could be okay.
We'll see you next week.
Thank you.
Thank you so much, Pete, as always.
Cheers, Carson.
Market strategist and economist at MXT Global, Pete McGuire. Short break.